Alrighty, Bitcoin, the good, the bad, and the ugly. For those of you who are very, very confused and don't know what we are referencing over here, this is a 1970s movie, 1966 to be precise, a classic. And if you guys haven't watched it yet, come on, man, come on. The first thing you guys need to do is go up to your parents and be like, Dad, Mom, how could you deny me? How could you deny me of this? And make sure you guys watch it before the month closes. Because if you guys don't watch that movie, you guys can't trade, man. You guys can't trade. To fully trade Bitcoin, you need to watch that movie. Otherwise, you're going to be missing out on way too much alpha. The entire thesis of Bitcoin is based off that movie. It is either good, bad, or ugly at all times. Anyways, let's go ahead and begin. Today, we're going to be discussing the monthly close. We're about to close a month in 19 hours and 11 minutes, right? There's been a lot of volatility on the lower time frames, and for the most part, you have literally just not looked at the lower, even the mid time frames over the past week or two, at the very least a week, right? There were trades prior to that, but for the last week, the market has literally been saying, hey, all that matters now, all that matters is going to be the monthly close. And you can see the bulls and the bears, the good, the bad, and the uglies, the Clint Eastwoods fighting to close Bitcoin well, while the bears are fighting against Clint Eastwood. So we are going to be discussing what the good is going to be for the monthly close, what the bad is going to be for the monthly close, and what the ugly is going to be for the monthly close today. And accordingly, I'm going to be giving you guys my targets as well. So let's go ahead and begin. We're actually going to be going backwards, though. We're going to be starting with the ugly. Let me go ahead and switch colors. We're going to be starting with the ugly. Then we're going to be talking about the bad. And then we're going to save the best for the last. We're going to be talking about what's going to be the good, right? There's nothing fantastic, right? There's only good, bad, and ugly. There's no fantastic, good, bad, and ugly. Just the good, the bad, and the ugly. Let's go ahead and start with the bad right over here. We are looking at Bitcoin again on the monthly time frame and the 10 SMA overlaid on it, right? And we've been talking about the 10 SMA since pretty much 2 months ago now. We started really focusing on it because we were looking for the prior month, right? The month of Jan, right over there, to close above it. But we know that just getting one candle close is not going to be enough. It's not confidence inducing. We wanted the confirmation above as well, which is why we started off this month. The month of Feb started off with us saying, hey, keep your eyes on the monthly 10 SMA. Watch the market's reaction of every test with the monthly 10 SMA. In fact, I did a dedicated video where I showed you guys how you guys can get lower time frame trades by just tracking the monthly 10 SMA, right? And you can watch how the 1 hour time frame was bouncing off the 10 SMA and giving you guys good trades, right? The market was playing off the monthly 10 SMA dynamically as it shifted. Now, as we draw close to the close of Feb, right? We started off with the month of Feb respecting it. And as we draw close to the month of Feb closing, you can see that we are still respecting it. Right? So what's the ugly going to be? It's as simple as that, guys. It's as mango as that. If Bitcoin loses the monthly 10 SMA, if we close underneath the monthly 10 SMA, we trigger ugly. We trigger a potential retest of the lows. But it doesn't have to be bad, right? If you guys act accordingly, you guys execute accordingly, which is what I'm going to be doing. I'm going to be de-risking of all of my altcoins accordingly, right? And appropriate proportions based on how sized I am. I will be looking to buy somewhere around this region over here, right? Repositioning. Because even though we lose the monthly 10 SMA, it doesn't mean that all of our other components of our bull market thesis that we've been laying out since November, we've been laying out various components, right? Like there's been 15 or something that we've been talking about. Since November, there's many of those components that are still triggered bullish. Perhaps we can talk about some of those today in the stream. But none of those get negated just because we lose the monthly 10 SMA. All that means is that we have to be a little bit more patient before expecting upside. And oftentimes that patience pays off because now you get to reposition at lower prices. And if you do get that further upside eventually, you're going to be much better off than getting the further upside right now. It's just the patience and waiting game that is painful. But believe me, regardless of whether we lose this monthly 10 SMA or not, it's not the end of our thesis. It just means that we trigger the ugly and we're looking for a retest of these lows over here. Okay, potentially even a sweep maybe, right? Making a new low. But let's see. We'll talk about that when we get there. But for now, that number, that trigger is pretty far away because we have only around 19 hours, right? Bitcoin is sitting at $23,000, 426-ish at the time of this recording of this live stream. And the monthly 10 SMA is sitting $2,000 away. Now, $2,000 is not much in Bitcoin terms. That's literally a 10% move from here. So away from $23,000, right? So we have 19 hours to do that, and Bitcoin could very, very definitely do that. So watching what Bitcoin does over the next 19 hours is going to be very, very key, guys, because it's if the bulls don't manage to hold that $2,000 leeway that they have at the moment, it's gonna tell you volumes. It's gonna be a signal. And if you guys even look all the way back over here, even though we closed above the monthly 10 SMA, we didn't hold it. We didn't confirm the candle above it. And as soon as we close underneath, you can see how the market reacted. Boom, right? Like, think about what the market did. It said, hey, we close underneath the monthly 10 SMA. It's time to give the world a pandemic. That's how powerful technical analysis is. It can induce a pandemic on the world. And we got this. That monthly 10 SMA is the reason we had COVID, guys. I'm not trying to make light of the situation. This is serious shit. This is serious shit. And you guys don't take this seriously, you guys will lose everything. People say, oh, fundamentals matter. Well, technical analysis matters even more because technical analysis drives fundamentals. TA is the reason fundamentals happen. Okay, so monthly 10 SMA is going to be really, really important. If we lose the monthly 10 SMA coming in at $21,523, which is $2,000 away from where we're currently sitting, that's when we look towards the ugly scenario, which is us triggering a move potentially to this zone over here, right? Maybe even a sweep of the lows, but again, let's not get too technical with this, okay? That's opportunity though, guys. What I'm going to be doing in that case is I'm going to be de-risking out of my positions and I'm going to be looking to reposition, reallocate. The market has shown its hand. The market has shown us which coins that they think are strong, which coins are worth going aggressive on. So that's going to be an opportunity regardless. If, however, we do close above it, we're going to need two other things to trigger because we still have the bad scenario, right? This is the ugly scenario. We still have the bad scenario, which we're going to be talking about very, very soon. But before we talk about that, I want to talk about this bit of technical analysis right over here. This is going to be the most important bit that you guys should keep at the back of your minds. In the movie, the good, the bad, and the ugly, which is the theme of today's presentation. If you guys do remember, the graveyard that they went to, or rather the grave that they went to, was Art Stanton's. The gold that they were digging for. And no spoilers, I'm going to try to avoid spoilers for those of you who did not watch the movie. Art Stanton, right, died 3rd of Feb. Oops. My pen, right over there. Okay. Art Stanton died on the 3rd of Feb. And they were looking for gold. We know gold's association to Bitcoin. Bitcoin was designed to be the digital gold for us millennials. And Stanton died in Feb. And we are about to close the most important monthly candle close for Bitcoin in years. Monthly close of Feb. You guys think this is a coincidence? Do you guys really think this is a coincidence? No. No, you morons. This is technical analysis. This is prophecy. This is the crystal ball telling you that if you do not heed Art Stanton, all shall be lost. All your Bitcoin shall be lost. So heed, Stanton, for the alpha. Indeed, Krisha, indeed. All right. Okay, so with that out of the way, let's go ahead and talk about the bad, right? We already talked about the ugly. The ugly is the monthly close over closing over the monthly 10 SMA, right? The bad is going to be based on the monthly open. Okay. The monthly open can literally be looked at as whether or not we close the candle green. Okay, because as long as we close the candle above the monthly open, we are going to close the candle green. So if you see the monthly candle closing green, we have defended against the bad scenario. Okay, it's as simple as that. The monthly open was at $23,127. If you guys want to be a little bit more precise and watch for that level being fought by the bulls, because that's what we've been seeing recently, guys. We've been seeing the bulls and the bears fight for the monthly open. If the bears win the monthly open, I'm pretty sure they're going to go for that monthly 10 SMA. Because remember, the monthly 10 SMA is coming in right over here. Right? The monthly open is right over here. So as things stand, the bulls are able to defend against the monthly open, giving themselves a leeway of $2,000 against the monthly close. The monthly 10 SMA. So monthly 10 SMA is right over here. Monthly open is right over here, right? So let's go erase off that to make it clear. $23,127. If the bulls can defend that, $23,127, it means that the bulls have also defended the 10 SMA, right? Just by default, because the 10 SMA is right over here. By that logic, though, if we go back up to the monthly 10 SMA, if the bears can claim the monthly 10 SMA within the next 19 hours and 10 minutes, it means that within that one day, the bears have taken out the bulls' monthly open as well as their monthly 10 SMA, which would be a massive win for the bears. And in that case, this is going to end up looking like a massive bull trap, where all the bulls got trapped into long trades and the bears just closed underneath all their levels, trapping all the bulls above them, right? So this is why in the first version of the stream, before we got cut off, I was talking about why this is going to be a very, 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 very important claim by the bears if they manage to close underneath the monthly 10 SMA. If we lose that monthly 10 SMA, guys, it's going to be pretty bad. It's going to be pretty bad. Okay, so we talked about, let's go back up here. We talked about the bad. We talked about the ugly. We talked about the bad. Now, let's talk about the good scenario. What's going to be good? What's going to be good? The monthly 55 EMA. Okay. So remember, let's go ahead and list it down over here. List it down for you guys. The bad is the monthly 10 SMA. Sorry, what am I doing? The ugly. The bad is the monthly open, the MOPEN. Now the good is the monthly 55 EMA. Okay. This green line over here that you guys are seeing, that is your monthly 55 EMA. You guys can see how the market has been respecting it. Ever since we lost it, this was the 3 AC dump. This was the FTX dump, right? So 3 AC dump, FTX dump. We've been underneath the monthly 55 EMA for a very, very long time. We claimed the monthly 10 SMA, which is sitting over here, last month. This month, can we claim the monthly 55? Okay, I'm not going to hold my breath for it, but if we do, it's going to be a massive, massive win for the bulls. Okay, I'm going to show you guys on the charts very, very soon how important it was during the 3K region. In fact, the claim of the monthly 55 EMA was the reason I wouldn't say the reason. I could go as far as to say the reason Mango started on YouTube, right? Because I was like, hey, everyone is ignoring the importance of this 55 EMA. If we reclaim it, I'm looking towards almost 13K. Like, if you guys go ahead and watch that first video that I posted on this channel all the way back then, right? The thesis was this. The thesis was this, that we closed above the 55 EMA. We're looking for a big move to the upside. Everyone was ignoring it. And now this time too, I'm pretty sure you're not going to hear too many people talk about this, or very few at the very least, or maybe even none. Mango is likely going to be the only people talking about this yet again. And you know why? You know why nobody wants to talk about this? Because they want to overcomplicate everything. They don't want things to be simple. They don't want things to be mango. They don't want things to be stress-free, because of course, the big wins and the money can only be made through complication. You have to be smarter than everyone to make money, right? Right? They don't want things to be easy. They want things to be flashy and complicated. But guys, it can be this easy, literally, right? You can base your overarching thesis on simple concepts like the monthly 10 SMA, the monthly 55, right? The weekly 21. We'll talk about that too if we have time today. But yeah, the monthly 55 EMA, that's going to be the good. The good is if we can close above it, right? So putting it all together on one chart over here, we have the monthly 10 SMA and the monthly 55 with our good, bad, and ugly all over here, right? With the ugly, which is the 10 SMA. The red line is our 10 SMA. We have the bad, which is the color of our candle. As long as you look at the color of the candle, you'll know whether we've defended the monthly open or not, right? Because if we close underneath the monthly open, the color is going to switch to red. It's as simple as that, right? If we close underneath the monthly open, we're going to switch from green to red, okay? And we have our good, which is the 55 EMA. This is it, guys. This is it. Keep it as simple as this. Keep it as simple as this for the next 18 hours now, right? Around 18 hours we have left before this monthly closes. Keep it as simple as this and you will be fine. So, Krisha asked a good question. She says, so what if we close between the 10 SMA and the 55 EMA, but the candle ain't green? So in that case, we're going to be in the bad scenario, right? Because the candle is red. We have not defended the monthly open. Okay, we've not reclaimed. We've not done this, but we've not done this either. So we're not in the ugly scenario, but we're in the bad scenario. We're in the middle. So in that case, what I'd be looking for is basically the next month, right? And I'm not going to be looking for too much bullishness for sure. I'll be a little bit more cautious on my positioning, because if we get this, I didn't mention this, but I should have. If we get this scenario right over here, in that case, I'll be increasing my allocation on my altcoin positions, right? And probably even my Bitcoin position, but I'm already really well allocated over there because I'm feeling really, really short on some altcoins that I do want to accumulate now. So if we do get the 55 EMA claimed, I'll be looking to add, right? If we, however, get the 10 SMA lost, I'll be looking to de-risk, right? I'll be de-risking positions and I'll be looking for downside. If, however, we get this scenario where we haven't closed above the 55 EMA, but we haven't closed underneath the 10 SMA, but we did lose the monthly open, we're going to be in the bad scenario, and I'll be looking for the monthly 10 SMA to get tested the next month. And again, we have to go back to the waiting game and watch for how price reacts to the monthly 10 SMA throughout the next month of March. And March has not been historically a good month, right? COVID happened in March. So again, I might be biased though. We might be just... we got to test that, right? Has March generally... I know March has been an exciting month usually, but I don't know whether it's always been bad. That being said, we have to watch for the 10 SMA to be claimed by the bear. If it's been claimed by if it gets claimed by the bear, by the bears, I'm going to be looking for further downside again, right? So yeah, that's essentially how I'll be viewing that. Hopefully, we'll get a close about the monthly 55, and our life will be easy. Wolfie says, if we defend the open but do not claim the 55, I suppose we should expect some lower time frame ranging and then power through the 55. So that's precisely how you look at it, Wolvie, because that would be the flip of what we just discussed, right? Where we defended the monthly open, but we didn't get we okay. So if we don't defend the monthly open and we close red, we'll be in this scenario. We'll be here in between, right? You can look at this as a spectrum, right? These three scenarios are spectrum. It's not as simple as good, bad, and the ugly, of course. We are simplifying it that way so we can better position ourselves, or rather better understand the various scenarios. But it's not going to be that straightforward, right? We can say that, hey, if we close red, we want to be like, through a mindset, we want to be positioning for a potential ugly scenario, right? If, however, we close green, but not above the 55 EMA, our mindset should be here, where we won't be positioning for a potential break of the 55. Get it? We start looking for the 55 to break if we close green. Because when it boils down to it, guys, this is still a indecision candle, right? Right over here, we have a doji-like candle. Call it what you will, doesn't matter. Spinning top, doji, whatever, doesn't matter. What matters is that it's an indecision candle where the bulls and the bears are trying to fight for this candle and there's no clear victor. And because of which, the market is going to be looking for reasons or any clues whatsoever to say, hey, who won this? Who won this candle? Which is why the monthly open is going to be so important. Because if the candle is green, you know that the bulls won the candle, not by much, but by just enough for the edge to lie in their favor, right? Then the next thing you look for is the high and the lows. If you get a candle like this and it's green, and then we take out the high on the next candle, of course, then you know, hey, I have confirmation on the fact that the bulls closed the candle green and now they've taken out the prior month's high. Similarly, if you get a red candle, right, then you start looking towards the lows, and then if the next month takes out the low of the previous candle, of that indecision candle, well, the decision has now been made by the market. Okay, Kirsten says, by the way, do you manage your risk with... I was just literally talking about it. That's funny. Do you manage your risk with a hard stop and position accordingly, or you position based on invalidation? That's a good question, dude. That's a very, very good question, man. Yeah, so you manage your risk based on your hard stop, and your hard stop should be way underneath your invalidation, right? I don't say way, it depends on your strategy, of course, and you got to manage according to volatility, which is what we do at Seed. What you want to do is always make sure, though, that your hard stop is not too tight to your invalidation. Okay, your hard stop is like, I have no choice but to get out of this trade, even though I want to stay in this trade. Your hard stop is supposed to be account protecting. It's not supposed to be I don't use stop losses to get out of my position. I use stop losses to protect my account, and my position size is based on my hard stop. Yep. It's less exciting. I totally see why people don't rather not do it that way. It's less exciting, but you know what, dude? It's kept me in this market while a lot of other traders, influencers, YouTubers have gotten wiped out during the entire FTX and 3AC saga. It has kept me alive and thriving in this market. In fact, I achieved my goals in November of this market. So, yeah. Okay, I'll take a few more questions. Candice, any questions from you? Oh, Adam says, join Grove, thinking about joining Seed. Pete says, Adam, I've taken many different trading courses and Mango is the one I always recommend. There you go, man. And Adam, if you're looking to join Seed, shoot me a PM, and shoot me or Krisha a PM. We do like to get to know our Seedling members before they join Seed, of course. And yeah, we have a nice family vibe in there. Remember, Seed is a commitment. It is a intensive course. There's a lot of content in there, and yeah, I have some future plans for Seed as well that I don't want to. I don't want to jinx, because if I talk about it, I may not do it. But yeah, I have some ideas for Seed. I hope you guys enjoyed the stream. I'll see you guys in the next one. Until then, do the Mango way, do the easy way, do the stress-free way.